Correct. Thank you very much. Good afternoon, ladies and gentlemen. The objective of my presentation today is really to explain to you how PayPal deals with AML risks and also share some of the concerns that we have in relation with the review of the third AML directive. But let me start with a few words about who is PayPal and how our product works. So we now have 143 million active accounts. An active account is an account that has registered at least one transaction over the course of the past 12 months. And we also process 9 million payments every day. So that gives you a good idea of how big we've grown over time. In terms of regulatory structure, we are a credit institution registered in Luxembourg, and our product qualifies as e-money. So the specificity of PayPal is that we sit on the existing financial infrastructure, meaning that our customers have to have a bank account or a credit or debit card to use our services. And basically, we work like a digital wallet, meaning that if you want to pay with PayPal, you have to attach that bank account or that card to your PayPal account. And this is where we're going to take the money each time you want to make a transaction with us. And we will transfer that money from your funding instrument to your PayPal account, and then from your PayPal account to the PayPal account of the recipient. And once the funds are received on the PayPal account, you can either keep them here to reuse them to do a transaction or transfer them to your bank account. I'd say the reasons why consumers like to use our services is, first of all, because we're safe. If you pay with PayPal, you do not have to share your financial details with the merchant. You share them with PayPal just once, and then PayPal keep them safe. And it's also very convenient to use PayPal, right? Because you just have to use your login and your password to connect to your PayPal account and confirm the transaction. You do not have to take your card, type in the details and everything. On the merchant side, offering PayPal as a payment methods mean higher conversion rates. It's also a great tool to receive payments cross-border because we work a little bit like a universal plug. So the legal framework that we're currently operating within is pretty simple. As an e-money product, we benefit from the simplified due diligence regime, which is currently provided for in the third AML directive. In practice, it means that even though we identify our customers when they sign up with PayPal, we verify their identity only later in the process when they reach certain transaction thresholds, which are provided for in the directive. And the rationale behind this specific regime is that e-money is essentially made for small value online transactions. It means that the risk profile in terms of fraud and also money laundering and terrorist financing is very different from that faced by traditional banks and financial institutions. And speaking about AML profile, PayPal's risk exposure to money laundering is generally considered low for a number of reasons that I'm going to explain. Once again, small value payments. The average transaction with PayPal is €15, and the average balance of a PayPal account is €40. As I said, we're built on the existing financial infrastructure, meaning that all of our customers have a bank account or a card issued by a registered financial institution, also meaning that they've been verified already. Generally, the money goes in and out through a bank account or a credit card. In the EU at the moment, there is no cash in the system, so you cannot upload your PayPal account with cash, and you cannot withdraw cash from your PayPal account. We're also what is called a closed-loop system, meaning that all PayPal users have an account with us, meaning that we have a complete overview of the transaction and complete control over the full cycle of the payment. All transactions are registered, meaning that we have a full audit trail for each of our customers. We also have in place appropriate tools and controls to detect money laundering and terrorist financing transaction patterns. We can also identify discrepancies between the information that is submitted by our users and the information that we detect in our system. For example, we can match country of origin information submitted by our users with the IP address, and so try to detect where the user is logging from. The majority of activity conducted through PayPal is coming from a very small minority of customers. And for those customers who regularly access their accounts, the vast majority of them deal in very small amounts. So that makes our system quite specific. Finally, we also have acceptable use policies to make sure that our system is not used in connection with high-risk industries. So this is for our profile. In terms of the fourth AML directive, we have a few concerns. But first, I'd like to say that we fully support the objectives of policymakers. We obviously do not want our system to be used by money launderers. But it's true that the balance that we've been talking about a lot, it's very important to us. We believe it's really essential to strike a balance between the need to fight against money laundering, but also the need to create a regulatory environment that allow businesses to grow their business without incurring excessive compliant costs, and also the need to offer customers a simple shopping and payment experience. I think generally we would also want policymakers to view new and innovative technologies as an opportunity as opposed to a challenge, or at least as much as a challenge, because it's true that new technologies raise specific risks that need to be addressed, but they certainly also allow companies like PayPal to reach regulatory objectives and comply with our obligations. It's clearly because we have algorithms and risk profiles in place that we are able to process and monitor that many transactions. So there are two main concerns we have in relation with the directive. We believe there is a risk that new payment methods may lose the benefits of simplified due diligence. So as I said earlier, SDD is key to us because it's what allows us to defer customer verification. We believe imposing upfront verification on players like us would be totally disproportionate to the risk involved. And for certain, probably smaller e-money issuers would render the service uneconomical to provide, because you have to understand that verifying a customer costs a lot of money. And those costs could eventually be passed on to customers, so that would result in higher, actually more expensive services for customers. And it's also true that upfront verification measures may deter customers from using our product, because when asked to verify their identity, we see that a significant portion of our customers abandon the transaction. Not because they're fraudsters, not because they're money launderers, but just because they don't want to go through the pain of, verifying their identity. It's too complicated, it takes too much time, and why would I do that for something I'm going to use maybe only once, right? So we are very much concerned that if the thresholds for verification go down or are removed, we will lose a lot of customers. The second concern that we have, and I will finish with that, is the home state versus host state debate. So PayPal, as many other players, operated on the basis of the freedom to provide services. It means that we're registered in Luxembourg, where we have our banking license, and we passport this license throughout Europe without using branches or subsidiaries or agents or distributors locally. We are supervised by the CSSF, who is the Luxembourg Supervisory Authority, and we report suspicious activity to the Luxembourg FIU. And then the Luxembourg FIU share this information as and when appropriate with other FIUs around Europe. Unfortunately, there is a growing desire by some member states to change the rules of the game and to apply really host state obligations to entities operating cross-border. And in particular, those member states are not very satisfied with the level of cooperation that exists between FIUs. They believe the communication is too slow, that it's too complicated, and they would want entities operating cross-border to report locally, so meaning that we would need to report in 28 different member states. We believe that it would be totally inappropriate, as you can imagine, and that it would have very serious consequences on the industry. Criminal activity is increasingly conducted cross-border, so creating a local reporting obligation would be a step back, we believe, and would probably render the EU less able to fight crime. We also believe that it is inconsistent with applicable EU text, and it's also clearly against the spirit of the single market. It would obviously further fragment the internal market, given the lack of consistency that we talked about between member states. And then you would have a situation where regulatory differences become a barrier to entry and creates disproportionate costs, which makes it very difficult for pan-European players to provide their services. And then in practice, you have to understand that there are different definitions of what needs to be reported. There are different format requirements, different procedures, different languages. So it would mean that our compliance costs would increase very much. And there is a risk that this cost is basically passed on to the industry. There is a solution available. It's a platform that's called FIU.net, and it's a platform that's currently used by FIUs to exchange information in a safe way. And there is a pilot going on, which is aimed at improving the functioning of the platform and make it easier and faster for FIUs to exchange information. So the technical solution is here. It just needs to be improved. That's it. Thank you very much.